Bum, 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 bum. Here we go. Okay, glasses, glasses, glasses. Here we go. Here's my glasses. All right, so let's figure this bad boy out. You're gonna go right there. My tea. Oh, look who's here tonight. Who's here? Wait a second, wait a second, wait a second. Who's here? Who's here? Chinzo, Helm Kevin, Donald Maggioli. Cool. De Niro Ashkoff, Milton, Mr. X, Gravel Rocks. Is that OG Green Goblin? Cool beans. Ingrid, how you doing? Lindarella, always a pleasure. Sorry, get my tea ready. Wade, what's happening? Abby, Kashne, what's happening? Kevy, Rick, Camper, Cypress, what's happening? What's happening, everybody? Good evening there. New York City Chulo. Okay, that works. All that kind of nice, neat, fun stuff. So let's get a rolling. All right, so we are up and ready to roll. Let's see if everything's here. See if everything is here. Let's go to YouTube real quick. Make sure that's working. Make sure YouTube is working. All right. YouTube. What do we got? What do we got? What do we got? Oh, and there we go, right there. Check that one out. Working. And it's working fine. Yay! All right, that one's done. Make sure. And this one. Hey, that one's working too. Cool. All right, so let's get out of there. And let's go back to here. And let's go back to here. And let's get ready to roll. All right. KY. Do you invest short term or long term? Short term. KY. It's short term. Sylvain, what's happening? Tado cuts. Tado's cuts? Okay. Mikey, I think I have a good one for you. How's Dell? Ooh, I love Dell. I do. Let's take a look at Dell. First thing, Russ, NNOX. Okay, Russ, what the heck is NNOX? NNOX. NNOX. All righty, check that out. NNOX. 21 March, 17 April, 16 May, 15 August. No, no, and double no. Okay, if it doesn't have weekly options, it's just not going to work. The only way you're going to get a simple, safe, predictable 1% per week using monthly options, yeah, you got to sit in front of your computer all day long and looking for opportunities to get in, get out. No, thank you. Sorry. Weekly options only. Coach T. Okay. MT Shilaba. Okay. Linda, what do I think of Siri this week? Ooh, Siri was on the list for this week. Raphael, there he is again. James, you're the man. It's 2 a.m. here in Switzerland. And I'm on the weed again. Feeling good. Stay safe out there. The world is crazy. Yeah, it has been a little cuckoo lately, but you know what? Is what it is. Jose Roberto, ¿qué pasa, amigo? Family Channel, what's happening? Kendra McVeigh, what's happening? All righty then. I am wonderful. Thank you then, Miss Kendra. All right, so let's get started. We're going to take a look at Dell first thing. Who said Dell this morning? Dell. Mikey wants to take a look at Dell. I love Dell. I do. Helps if I spell it right, doesn't it? And here we go. You ready? First time this evening. Let's take a look at this. The high, the low. Where was it? Where is it? Look at the movement. Up, down, up. 99.98. Well, that's pretty close to 100, don't you think? 99.98. That's pretty damn close to 100, I think. All right, so the 100 is this week going for 87. Now, we're going to say no to this week, and the reason being there's only 2 days left, Thursday and Friday. So there's no sense even looking at anything for this week. So let's look at next week's 100. Next week's 100 is going for 211. Do you realize 211 is over 2%? Well, hell, I'm going to write Dell down. Going to write Dell down. Dell down. Now let's actually do Dell, just for the fun of it, because I like the way the chart looks. Now, what I'm looking for specifically, not to be at the high of the year. I don't like buying at the high of the year. It just doesn't make sense. And I don't want to buy it at the bottom as it's dropping. I want to buy it as it finds its bottom, turns around, and goes back up. Who else we got to hear? Roy, GD, Bubba, Salomon, Riggs, THE. Okay. Icy Rocks. What's happening? Pat, Pawfish, Bubba. Bubba wants to take a look at Tesla. Bubba's new here. Now, the reason why I know Bubba is new here, number one, I would remember that name. Okay, Bubba actually showed up at my wedding. Not this Bubba, but anytime I see that name, I think of my best friend, Bubba. His name's Bobby, but I'm the only one who gets to call him Bubba. Reason being, I've been calling him Bubba since 1979. Yeah, so I can get away with it. Anyway, these are dirty. All right, Bubba, Tesla. Now, I like Tesla. Don't get me wrong. Not that I would buy a Tesla. Anything that has a computer in it and can be tracked, turned on and turned off remotely, yeah, no thank you. Okay, think about it. You're driving down the highway and you're driving in a Tesla and they want to stop and question you. Click, click, click on a computer. Boom, your car is locked and you are disabled on the side of the road, locked in your car. Yep, I don't do anything that has those computers in it. No thank you. Family channel, thank you for that. Bro, Doe Shaver. What's the cash amount minimal buy-in? Dude, I have no idea what you're talking about. I'm not trying to sell anything here. Jose, ¿qué pasa? Bro, Doug, damn, I was born in 78. Well, terribly sorry. I'm just a smidge older than you. All right, so that being said, let's take a deep dive into Dell. Deep dive into Dell. Ooh, that sounds good. Deep dive into... All right, a year ago, Dell's at 108.63. The high of the year actually had a double high at 179.50. That was the end of May. Didn't take long to find the bottom. In fact, the bottom was in the first week of August, 87. Okay, 87.24. And she shoots up again. Look at that. Shoots up again to find a high of 147.66. Let's take a look at the last 90 days. Now, the last 90 days is the last 3 months. Okay, quickly. High, a low, where was it? Where is it? Look at the motion. Up, down, up, down. Now she's going back up again. Now, for the 90-day chart, this looks awesome. Get your 90-day high up here, pulls back, back up, back down. Look at that right there. Now she's going back up again. How far is she going to go back up? Well, let's jump into the 30-day chart, because the 30-day chart gives me a better idea of where do I think it's going to go by next Friday. Because I buy and then I want to get out as soon as possible and capture 1%. Well, I'm not going to capture 1% 21 March. That's 2 days away. Not enough time. But look at this. 28 March, that's next Friday. That's only 9 days away. I got no problem doing a 9-day trade. If I jump in, I jump out, get my 1 or 2%. This one, I think, is going to be a little over 2%. So let's go take a look at it. Here's your 90-day high. Your 30-day high, your 30-day bottom. Look at this, 1, 2 weeks going towards the upside. You can argue all you want, but you can't argue facts. There's 30-day high. Here's your 30-day low. Now it's going up. Okay? Whatever you want to bitch, moan, and complain about, don't do it to me because I really don't want to hear it, you know? I like numbers. Numbers don't lie. People do. All right, so we're on our way up. The current price, $99.98. So if I buy it at the money at the moment in time, $99.98, fine. Let's see what it looks like. All right, let's get rid of this. Let's change this right here from single to covered call. Now, for those of you that are new here, I'm looking for a simple, safe, predictable, consistent trading strategy. Now, the simplest strategy is just buying the stock, but there's no profit there because you have to sell something in order to make a profit. Now, when I buy first thing tomorrow morning, my profit is already built in. Remember what I said, predictable? Well, I already know what I'm going to make before I even do the trade. Now, that trade is called a covered call. I'm buying it for $99.98 first thing in the morning. I'm going to turn around and sell a stock option against it so somebody can buy it from me anytime they want at $100. That's 2 cents off. So why am I doing a 2-cent trade? Well, it's not really 2 cents now, is it? Now, if I'm buying it $99.98, I sell it to someone else for $100 for that privilege, okay, for me holding it for them until the 28th of March, which is next Friday, they are going to pay me this premium right here, $2.11 per share. We're actually going to do a sample right now. So if you're worried, if you're concerned, this is all being recorded right now, just this screen right here. So if and you want to take a look at it later, okay, up in the bio gives you a link to my websites and all my social media. It is being recorded, okay, on YouTube. So later on, you can take a look at this. Whatever I say tonight, you can watch it over again tomorrow, the next day, next year, whatever you want to do. So if it makes sense, write it down. Think about what I'm saying, and that's the number one question you should be asking yourself. Does this make sense? Pretty simple. Does it make sense? It either does or it doesn't. All right. Now, let's change it to a covered call. There we go. Now, I want the 99.98. The closest one is going to be the 100. There it is right there. Now, I only want to do one contract so you guys get an idea of what it costs. Okay, now I'm going to change it from market order, from a limit order. Now, here's the order right here. Now, I always encourage people to say it out loud and listen to what you're saying, because your eyes and your fingers can play tricks on you and you might hit the wrong button. Now, the reason why I'm saying that, I hit the wrong button 3 times last year and once this year. Okay, I actually lost money because I hit the wrong damn button. Alrighty, buy one covered call of Dell 100, that is the weekly. 28 March 25, that is next Friday. The $100 call option against Dell the stock at the market to open to open. Now, the reason I say to open, because it's 2 trades. You're actually doing, it's what we call a 2-for-1, like a 2-for-1 special. You buy a stock, you sell an option, all one commission. Great, only pay 1. All right, anyway, here's my break even, here's my maximum profit, and here's what it's going to cost. Let's do a little bit of a calculation. Calculator, come on down. You're the next contestant on Let's Make a Deal. Anyway, there we go. Let's get this out of there, and let's go right over to here. Now, to find out what my profit is going to be, actually what my rate of return is going to be, I take the profit, 278, and I divide it by the cost of the trade, including commissions and fees, $9,722.67. All right, so I'm going to divide it by $9,722.67. Gives me a grand total of 2.8%. 2.8. Well, that works for me. I like 2.8. I'm going to write this one down. I might do this one on Monday. 2.8%. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trades we found this week that are over 2%. 9. Do you realize that 2% a week is over 100% per year? That means you can double your money every single year. 2% a week is over 100%. There's 52 weeks in the year. So do I like Dell? Yeah, I like Dell. Dell's on my list. Okay, I grew up in the 60s, 70s, and 80s. I've seen Dell come from nothing and go to something. So I know who they are. I know what they do, and I am okay with it. All right. 2.85. That's not bad. All right. Next. Now, that's not a recommendation. That's just me punching through some numbers and taking a look at some stocks that you guys asked me to take a look at. So, Bubba, as much as you like Tesla, and don't get me wrong, some people made a lot of money on Tesla. I don't do Tesla because it doesn't have any dividends. Now, people always ask me, well, why are you investing in dividends? I'm not. I'm investing in dividend stocks. Now, there's a reason why. Let me give you 1 second. Hold on. All right. Let's get out of here. Let's go back to here. And let's go to here. Oh, yeah. Nice. Okay. Behind me, you see what looks like a regular calendar, but this isn't. This is a dividend, an EX dividend calendar. What does that mean? All these little green dots. Okay, you probably can't see them on your iPhone or your iPad or whatever you're watching on TikTok. Now, if you're on a computer or on a big screen TV, now, yeah, you can watch me on the big screen TV. It's being live broadcast through YouTube. Okay? And we're thinking about getting our own TV channel sometime this year. I'm thinking about it. I haven't quite figured it yet. I got to get a little bit more momentum and a little bit more followers before I can financially justify a TV station. Anyway, that being said, the EX dividend calendar. Now, when I say I'm looking to invest in dividend stocks, now a dividend is a portion of the profits the company makes and they give it back to the investors. Okay, so a portion of their profits gets handed down to the investors. Okay, great. Each one of these dividends dates, little green dots, is EX dividend date. Now, there's 4 dates to remember. Date number 1, the announcement date. That's when the company actually tells you, hey, this is James from Dividend Stock Talk. We made a whole bunch of money this year, and this is what we're giving to you, and this is the date that we're giving it to you. That's the announcement date. They tell you what they did. They tell you what they're going to do. There's announcement. Date number 2, the EX dividend date. That is the last day the stock trades before they pay their dividend. Now, they tell you this just in case you want to collect that dividend. See the little green dot? If you want to collect the dividend from any one of these companies, you have to buy it before that date. Okay, so look at Cincinnati Financial right here. Okay, Cincinnati Financial has its EX dividend date on the 24th. Okay? Now, if I want to collect that dividend, I have to buy it the 21st, the 20th, the 12th, the 7th, the 26th, the 3rd, the 10th, the 18th, any day before that date to capture the dividend. Date number 3, the date of record. Whoever owns the stock on the date of record is the person who is entitled to that dividend. Date number 4, the payment date. That's when you get your money. Okay, pretty simple, right? So I use the EX dividend calendar to tell me when to buy a stock. And here's the kicker. You ready? Because normally most stocks have a tendency to go up in value before the EX dividend date. So if I wanted to get the dividend on Cincinnati Financial, I will buy it 2 weeks before the dividend date. Okay, this is 1 week, this is 2 weeks. And I'll do it on a Monday because I like a covered call. And the reason why a covered call, it's simple, it's safe, it's predictable, and I can do it every single week. Consistent. Simple, safe, predictable, consistent. 1% a week, that's what I'm looking for. Now, 1% a week, if you can't count, 1% a week is over 52% per year. Actually, it's over 74% per year if you compound it. I don't compound mine, I spend mine because I'm retired and my money has to come from somewhere. Believe it or not, as a species, we humans are the only species on this planet that's got to pay to live here. So depending on how you want to live will depend on how much money you need to bring in on a monthly or weekly basis. Okay, so for me, 1% a week works perfect for me. Yeah. All right, so who else do we have here tonight? Terry Wyatt, how are you today? SC, what's happening? Let's go. Let's go, Brandon. Okay, I'm not quite sure, but all right. Bella, good evening. Joseph Giannotti. Oh, what a name that one is. Chewy, what's going on? King Alawi, that's a cool name. Kelly Gordon, how are you? Miss Ashley Fox, pleasure to see you. Bubba, thank you for that. Quantum Realm, did he poke you? I have no idea what you're talking about there, Quantum, but okay. Tony from Canada, what's happening? Thanks again for that, Bubba. Real Pranks, okay. To the Left Design, I have no idea what that means, but welcome. Mike Cecil, what's going on? Merrill Lynch does this. Do they really? Cool beans. Well, Boogeyman, why don't you tell me which stock Merrill Lynch actually does this in, and we'll actually take a good look at all the numbers that Merrill Lynch is offering you. Now, I can almost guarantee with 100% accuracy, Merrill Lynch does not have your best interest in mind. So I'm calling you out there, Boogeyman. Tell me what stock or what ETF Merrill Lynch is doing this. Because I'm kind of curious. Because if they're doing it, hell, I'll just give them my money and I won't do jack shit, nothing. Not pretty good with that. Jersey wants to take a look at Riot. So let's pop up and look at Riot. Why not? While Boogeyman tells me what stock he's talking about. Riot. R-I-O-T, Riot. First and foremost, first thing I want to see is the high of the year, the low of the year. Where was it a year ago? Where is it now? And what has it been doing for the past year? Sideways, down, up, down. Now she's going back up again, 789. Okay, the 8s are going for 33. Holy shit, look at the 750s, 58, 57. Yeah, I like those numbers. Just because I like the numbers doesn't mean it's a yes. Okay, we need to take a look at, oh, my hair's a mess. We need to take a look at a little bit more. So let's take a gander. While we're still waiting for Boogeyman to give us that answer. A year ago, 1086. The bottom of the year was the beginning of September, 663. All right, well, here's the top right there, 1587, and that was the beginning of November. Look at the last 90 days. Okay, here's your last 90 days. Same thing. High, low, where was it? Where is it? Look at the motion. Down, up, down, sideways, down, sideways. Still looks pretty damn good. Okay. Last 30 days. Now, last 30 days gives me a good idea where I think it's going to go next. Okay, same thing. Here's the high. Here's the low. Look at the motion. Down, up. Okay, here's the bottom right here. And she's going up extremely slowly. So you got to think to yourself, am I okay with that movement? That's either a yes or a no. Okay. Now, let's try one on Riot. Now, Riot always has a good premium. And no, Riot does not have any dividends. The only reason we're looking at it is because someone asked us to take a look. And yes, I do own some Riot. And yeah, it was a recommendation by one of my followers, and he wanted me to do it, so I did. Why not? And it worked out fine. Okay, fine. Change it to a covered call. There we go. $7.89. All right, well, I'm going to go for the 8s. Here's the 8s right here. One contract at the market, because the market filled instantaneously. Here we go. You ready? Buy one covered call of Riot 100. That's the weekly. 28 March 25. That's next Friday. That means whoever buys this option from me has between the moment they buy the option from me until the expiration. And the expiration is the 28th of March at 4 p.m. Because after 4 p.m. next Friday, you can't do anything. So it's either do it or don't do it. It's that simple. All right. Here's my profit, $47. And it's costing me $753. All right, well, get the calculator out. Come on down, Mr. Calculator. Here we go. Let's clear this. $47 divided by, because 47 is the profit, remember? 47 is the profit. divided by the cost of the trade plus commissions and fees, 753.66. All right. Divided by 753.66. That gives me a grand total of, holy shit, 6.2. Yeah, I'm going to write that one down. Okay, 6.2. That's nice. But here's the thing. Number one, it's not a recommendation. Number one, I don't suggest anybody do it until you do your own due diligence. Do your own research. Make sure it fits into your trading strategy. Make sure you're okay with it. Ask yourself a couple of questions. Question one, does it make sense? Question two, do I like this stock? Question three, do I like this stock at this current price? Question four, am I willing to buy this and hold this until the day I die, continually writing a covered call every single week, bringing in cash flow and selling it only if it hits my target price? Well, my target price is $8. It could hit $8 next week. It could never hit $8. Never buy something you're not okay with. Okay? Make it plain and simple. If you don't understand it, don't buy it. All right. But yeah, 6.2, hell yeah, I'm going to take a look at that one. All right, let's take a look at some of these questions. La 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 la. Okay, free speech and other stuff. Guten Abend. I sold a weekly put on Mara and got assigned at 14. So I sold 321 covered call, collected 1% expiring this Friday for 15. I am now up 80%, but still have $3 left in the trade. Well, that's cool. My question is, do I close now and reopen a new covered call or let it ride and expire this Friday? Or what do I think? Okay, here's my thought. Hold on. Laura, please, I need a little suggestion. Laura, you actually got to ask a question. Oh, you know what? Better yet, Laura, send me your phone number. We'll chat. I'll chat with you for 10, 15, 20 minutes. No charge at all. We'll just chat, see if it's the right fit for you. So, free speech and more. My thought would be, now, I haven't looked at the chart yet. What do we look? We're talking about Mara. Okay, so hold on a second. Let's get out of here. Get out of here. Let's get out of here. Let's get out of here. Let's go back to this and let's put Mara right there. M-A-R-A. Okay, so basically, wait a second. Let's go through the whole gambit with Mara first. All right, so here's Mara. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Sideways, down, up, down. Here we are right here, 1253, 1268, which would be 1250 would be the closest, 67, or the 13 would be 46. Both of them well over 1 or 2%. So the question would be, does it make sense for me to do Mara? Well, let's take a look at what he's talking about. Okay, first and foremost, let me zoom into this. Okay, that's what it looks like for the past 30 days. All right. All right, so the 14 is right there. Okay. I got assigned at 14. Okay. You sold a covered call at 15. Okay, here's 15 right there. All right. 15 and 15. All right. Collected 1%, expiring this Friday for 15. Yep. I am now up 80%, but still have 3 left in the trade. Question is, do I close now or reopen a new trade? Okay. What do I think? Okay. So here's my thought. Okay. Not even looking at the numbers. Okay. Not even looking at the numbers. Let's look at the chart. By looking at the chart, what does it tell you? Okay. It tells you the high is here. She dropped down here, made a bottom, shot back up, took 1 week to go down, 2 weeks to go up, 1 week to go down, and now we're right here. Okay, so here's the bottom, and more than likely, the way the chart looks, hypothetically speaking, it should go back up. So being at the bottom here, you've already collected money on the 15. Well, an idea. I'm not telling you what to do, but here's an idea. If you let this week's expire into nothingness, fine. And then look next week and see what the numbers look like next week. Are you able to get another 1 or 2% next week, even though they're currently at 12.53 and you're in it at 15? So I'd be looking at the 14s or the 13.50s. Personally, me, because you get a higher premium. And a higher premium means more money. But as the stock goes up, you let it expire and then you follow the next week with one a little higher until you get past that 15 again. Did that make sense? See, right now you got it at 15. Sold somebody the rights to buy it at 15. It's going to expire worthless. Fine. Either roll it forward or wait until Monday, sell another covered call next Monday. Me personally, be looking at the 14s or the 14.50s, not the 15s, maybe even the 13.50s. It depends. Okay, is it coming up tomorrow and Friday? If it is, I do the 14 or the 14.50. If she's going to go flat, sideways, or down, I do the 13.50s or the 14s. It's always going to depend on the numbers. What are the numbers telling you? What is the chart telling you? The chart telling you here's the high, here's the low, back up, back down. Now what are we doing? Hypothetically, she should be going up. Well, what does it normally do this time of year? Now for that, we're going to use the seasonality chart. Seasonality chart basically gives you an idea of what the stock does year after year after year. Okay, so January 1st, all the way here to the left, all the way to the right is December 31st. That is a one whole year. Now you see the blue line right there? That blue line represents this year's movements. Okay, the blue dot right there, that's today. Okay, now the red, that is 10 years worth of movement, what it normally does. Business as usual, that's what the stock normally does. Well, look at where we are right now. Well, let's zoom in and see exactly what happens. Now, to zoom in, you take your cursor, put it right on top of that blue dot, left click, drag right until that gray area lights up, or to that line right there. Okay, so for the next couple of weeks, okay, here's where we are, right there, the blue dot. So she's going to go sideways for about a week, dip down a little bit, and then shoot up. Well, that looks good. I wouldn't mind at all. If it goes sideways for the next week or so, keep grabbing some premiums. Now, Mara can give you 1, 2, 3% every single week. Well, why the hell not? Okay, but do you like that company? Are you willing to play that game? Are you willing to roll the dice every week, pick up 2%, pick up 3%? Well, 2% a week is over 100% a year. You can double your money in a year. Okay. I collected 15. I am up 12, leaving 3 left in the trade. I just don't know if it's worth waiting until Friday to collect the $3. Now, you could roll it forward and collect more money and wait until next Friday. But always look at the numbers. If I roll it forward, what am I getting? If I let it expire, do it again on Monday, what am I getting? Unfortunately, we don't know what's going to happen between now and Monday. So, like they say, a bird in the hand is better than 2 in the bush. You got to think of that one. Okay, so I'm still waiting for Boogeyman to tell me what Merrill Lynch stock is. It's probably fine. How you doing? Hugh Johnson, what's going on? Mikey, do you ever set a strike a little higher than your entry to try to capture some additional upside? Well, of course I do. Mikey, it's always about the numbers. What stock am I looking at? Mara, M-A-R-A. Okay, to the left design, yield max. Dude, seriously, look at the numbers. Okay, yield max. I'll do it for you. Uh-oh. You actually got to tell me what the yield max ticker symbol is. So I'm going to wait for you to tell me that one. Silver Guy, how you doing? Gracias. Dankeschön. Antoine, what's happening? Okay, so to the left design, you got to tell me what ticker symbol you're looking at for yield max. Misty. What are you shitting me, Misty? Have you not read anything? MSTY. I think this is the one that's got a lot of people worked up. And I think people are being blinded by numbers and they're not really comprehending what they mean. Okay? Now, what do I think about Misty? I don't like it. Now, when I want to buy something, I want to make sure it's consistently profitable. I got 5 rules. Okay, rule number 1, never buy something you don't understand. If you don't understand everything about it, don't buy it. Rule number 2, never sell at a loss. It defeats the purpose of the whole game. Rule number 3, consistency of profitability. Me, personally, I like 2 decades. Now, the stock market's been around for over 400 years. I think 2 decades is not that much to ask for in a 400-year-old industry. Okay? Misty, thing's not even 2 years old yet. I wouldn't do it. I wouldn't do it with your money. Well, I would do it with your money because I really don't care. Anyway, consistency of profitability. What does that mean? That means it goes up every single year, higher and higher and higher and higher. So let's take a look at numbers on Misty, and then you let me know, is this going higher consistently or is it not? Okay, first of all, first and foremost, April 24. It's not even a year old. Think about it, not even a year old. Why would you put your money into a company that's not a year old? I know why you're doing it, but, I kind of wanted to, get you to say it. How am I doing today? Tyrese, it's been a while since I heard from you, brother. How you doing? All right, so let's take a look at the numbers for Misty, and you let me know, is this consistently profitable or not? 4.13. Well, it starts out with a bang, but look at the second one. 2.5. That's over a 40% drop. 40% drop. Explain to me why you think that's good. But hold on, it gets worse. Really does. So it goes from 413 to 252. That's backwards. 303, okay, nice increase. 233, backwards again. 194, backwards again. 185, backwards again. 420, big jump. 442, not bad increase. 308, backwards again. So we're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9. 9, all right? 1, 2, 3. 3 out of 9 went up, which means 6 out of 9 went down. No, and I know why you want it, but let me see if you understand this one. To the left design. We're going to go to the summary, and you're going to see something. You're going to be all excited until I explain to you what it is that's going on. All right, here's what people are getting all excited about. That number right there, the yield, 157.9%. Let's call it 158%. Now, I need you to think long and hard about this. Hold on. Now, as wonderful as that number looks, because it does look good, okay, to the left design, answer this question for me if you will, okay? If I'm in business and I make $100,000 profit, $100,000 profit, how the hell am I going to give you 157,000? Because 157% is 50% more than what you earned. How can you give more money than you're making? Okay? 100% profit, giving out 100% of your profits. Well, number one, that's unheard of. But giving away 158% of your profits can't happen. It can't happen. The only way that is going to happen is if they continuously bring in suckers to dump money into this stock, and they're using that money, not profits, because they're giving you 100% of the profits plus an additional 58%. No possible way that can be sustainable. Okay? You cannot put in 150% of your, you can't give out 150% of your profits. Because if you give away 100% of your profit, that's all there is. So where are you getting the other 57.9%? Where is that coming from? It's coming from somewhere. It's coming from the new investors that are jumping in. So eventually somebody's getting screwed because there's no way on God's green earth, if I make $100,000 profit, then I'm going to give you $158,000. I only made 100. How can I possibly give you 158? That freaking ridiculous. There's no possible way that can happen. Anyway, what stock is that? That's Misty. Number one, I don't do companies under 20 years old. Just doesn't make sense to me. Most companies go bankrupt within 3 to 5 years. 3 to 5 years. That's why I don't invest in anything less than 20 years. All right. How am I doing today? I'm doing wonderful. Are you not surprised XRP didn't jump like big like everyone thought? I'm not surprised at all. And XRP is not a dividend stock. Tyrese, 2.8. Nice. The implied volatility has been insane this week, especially with margin. Yes, you're absolutely right. The Silver Guy, do I hold these stocks long term? No, your idea of long term and my idea of long term are two totally different things. Okay, my idea of long term is 30 days. Okay, that's my idea of long term. All right, so now I'm past that long term stuff. Live boxing, Sam. How are you doing, Sam? Live boxing, what's your YouTube channel called? The 10-Minute Trader. Now, Kevin, not Kevin, who said that one? Oh, live boxing. Now, live boxing, every video you ever seen me do. Okay, I'm assuming you've seen one of the videos. Thank you, Mary. Every single video I say something like this. Hey, everybody, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable skizz, 1% per week. Every single video I start out with that. Hi, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Do your research, see how long The 10-Minute Trader has actually been a live, viable website. Kevin Huggins, how you doing? Tatted up Ginger, dude, what's happening? Where is this calendar? Okay, Paul Athwal? Okay, Paul Athwal, this calendar is... Let me get back to here, get back to there. Okay, on Think or Swim. Right up top, you see where it says monitor, trade, analyze, scan, market watch, right at the market watch. So I bring my cursor right to the market watch, drop down window, quotes, alerts, visualize financing rates, calendar. There you go, right there on Think or Swim. Now, if you don't have Think or Swim through Charles Schwab, you can always go to Google in the search, look up EX Dividend Calendar. Okay, a whole bunch of people may have one. P. Fezzi, for real. P. Fezzi, for real. What's happening? Melodic Angie, hey there, how are you doing? Hey there, hi there, ho there. Peter, what's going on? Let's go back. I'm still waiting for what's his name? Rip Rider 4, what's happening? Sam, check out CIVI dividend. I don't know. I've never heard of CIVI, dude. CIVI. How about no? Okay. Now, the reason I'm saying no to CIVI, who said that one? Sam. Okay, Sam, thanks for showing up. You're relatively new here. The reason I tell you're relatively new, two reasons. Number one, I recognize the name. I'm very good with names, okay? Never seen you here before, not a problem. However, CIVI, take a close look. 21 March, 17 April, 16 May, 20 June, 18 July, 17 October. Do you notice something interesting there? They are all months of the year. Now I'm going to show you something else. Okay? 21 March, 28 March, 4 April, 11 April, 17 April, 25 April, 2 May, 16 May, so on and so forth. Those are weeks. Those are every single Friday. which means this is a weekly optionable stock, which means I can trade this every single week. CIVI is a monthly optionable stock, which means I can only do it once a month. Now, once a month doesn't work for me. The numbers just don't work. Terribly sorry about that. Just don't work, Sam. Okay, I do weekly options only, not monthlies. The numbers just don't work. Brian, are you still in Kohl's? Yes, I am still in Kohl's. Kohl's is paying me over 1%. Ooh, look at that. What is Kohl's is paying me over 1% every single week. So why would I get rid of it? Think about that. Kohl's, KSS. Here we go. KSS. Okay, so Kohl's. Now, some people may say, oh, that's ugly. Hold on a second. Don't be so judgmental. First and foremost, here's the high of the year. Here's the low of the year. Look at it where it was. Look at where it is. Look at the motion. Up, down, and then up again. Okay, this could be the bottom of the year. Now, you've heard it many, many times. You're going to make money in the stock market, buy low and sell high. Well, guess what? You cannot get any lower than the low of the year. This could be a golden opportunity for some of you if you like Kohl's. Hold on a second. Before you jump to any conclusions, let's take a look at something. This might change your mind on Kohl's. We're over here on Yahoo Finance. I always tell people, make sure you have at your fingertips a financial website so you can get information that your stockbroker or your trading platform does not have. So here's Kohl's right here, 871. So let's go take a look. Okay, here's our information right here. Okay, the 52-week high and low, the volume, the average volume, the yearly target, because they have a yearly target higher than the current price. Well, that's a good thing. At least they're projecting it to go higher. Earnings per share, 98 cents per share. The ratio is 6% yield. Okay, that sounds good for those of you looking at that. Now, that's only one part of it. That's not quite what I wanted to show you. What I want to show you is this right here. Over here, we're going to look at statistics, and I'm going to show you something that you probably don't really look at, but you probably should. Now, here's Kohl's. Let's go down. Equity, assets, okay, 2.8, revenue. Here's what I want to show you. Revenue per share. Okay, that gives you an idea of how much revenue do they have, okay? $16.22 billion a year. That's how much money they're making. But if they're making all that money, how much is that per share? Well, that's $146 per share. So for each share you own, you're helping the company make $146 per share. That's huge. Book value, $34.25. Do you know what the book value is? The book value is if the company, the corporation, was ordered by the Supreme Court to liquidate and pay off all the investors. Yeah, you buy the stock for $8.71, and if the court orders them to liquidate, you get $34.25. That's it, hey, pay off all your bills, give everybody their money back. That's what it is, $34 per share. Now, the reason why I'm showing you this, I'm going to point out something to you. Now, remember those numbers. Now let's take a look at one of those stocks that everybody says is absolutely wonderful, delightful, and awesome. NVIDIA. Let's take a look. Now, NVIDIA is $118 per share. Okay? Their revenue, $130 billion. Okay? That's awesome. But revenue per share, $5.31. That is a huge difference. But hold on, it gets worse. The book value, $3.24 a share. This stock is $120 a share. but it's only worth $3.24. But hold on, it actually gets worse. It does. Summary. The dividend, 4 cents. That's 1 penny per quarter, or 0.03. That's not even 1/100th. That's 3/1000ths of a percent. Okay, 3/100ths of a percent. That's horrible. Think about it. 1 cent dividend. The book value is, what is it, $3? Earnings per share is freaking ridiculous. So why do people like Nvidia when the numbers aren't as good as Kohl's? Take a look at the numbers. The numbers don't lie. Okay, I would never buy Nvidia. Nvidia, the dividend is horrible. Why would you pay $118 per share to get 1 penny on their profits? Yeah, no, thank you. Who do we have over it? Nizar, what's happening? Lou Chains, what's happening with you too? Cool beans. All right, let's keep on keeping on. Jeff Jerzik, thank you for that. Ashok Kumar, how are you doing? Miguel, que pasa, amigo? Hi, Fader. Thoughts on TRMD? I never heard of it. All right, so let's take a look at TRMD. TRMD. No, you weren't paying attention, were you? 21 March, 17 April, 18 July, 17 October. Those are months of the year, which means it is a monthly optionable stock, which means it's a no. Okay, I don't do monthlies. The numbers just don't work. Tatted Up Ginger, what's up? Drew 24, how you doing? David 20160, how you doing? Angie, have the calendar on Think or Swim pulled up, and I've selected dividend, but I don't recognize any of these stocks. Angie, here's the thing, Angie. Now, over here, top left, where you have your watch list, the very next box next to the watch list, click on that, slide all the way down, create watch list. Okay, create watch list, make up a name. Angie's best dividend stocks to buy all year long and to be happy and successful with blah, whatever you want to name it. Okay, and then add your symbols. Now you can cut and paste them in by importing them. If you get a CSV file, which basically what do they call that? An exe, an Excel file. Cut and paste, just add them into it. Then you hit add symbols and then hit save. Once you do that, then, and only then, do you go over to the Market Watch, to the calendar, click on the little sunshine right there, or the cog of the wheel, whatever you want to call that little icon. Click on there, and then come down to where it says personal. This is your own personal lists right there, and you can create your own personal lists. Label it whatever you want. Dividend Kings, Dividend Aristocrats, weekly optionable stock, stocks that look awesome that are under $20, stocks that are great but are over $50. However you want to label it, whatever it is you're looking for. Okay? If you want, you can drop me your number. I'll give you a buzz and I can walk you through it. It's really not that difficult. All right. Do it once or twice, you'll get the hang of it. Ashok Kumar, Soundhound is not 20 years old, dude. Okay? Sorry. But I do appreciate that, though. Sam, don't we need to check the free cash flow? Sam, what I'm looking for, okay, Boogeyman, actually, I get dividends daily, okay? Now, Boogeyman, it's nice for you to say that, but I'm more of show me, don't tell me, because when I say numbers don't lie, because you could take a look at the numbers. 1 + 1 is going to equal 2 no matter where you are in the world. You telling me you get daily dividends, I'm going to call bullshit. Tell me the dividend stocks that you are using or whatever it is that Merrill Lynch is doing for you. I would like to see the daily dividends. I don't see it. I don't call it. I'm calling your bluff. Let's hear you. Okay, so Sam, the cash flow, the free cash flow, what I'm looking for, Sam, I'm not really concerned for the free cash flow. I'm looking for consistency of profitability. Okay, is the company more profitable this year than they were last year? Are they going to make more money next year than they are going to this year? So I want 20 years, it's 2 decades, higher and higher and higher and higher profits. That's what I'm looking for. Cash flow doesn't really mean very much because cash flow doesn't give you profitability. Angie, when I type in familiar stock into the ticker, it doesn't show any dividend payouts, even months ahead, for none of them. Okay, Angie, it might be best just give me a call and you and I can walk through some of them. Boogeyman, accrue money on bonds and preferred shares as well. Okay, Boogeyman, I don't know a single bond that pays over 30%. Seriously, I don't. Preferred shares, I don't know any preferred shares that pay over 30% either. So I really do. I appreciate your sharing. I do. I appreciate your sharing. I appreciate your interaction. But you're not giving me anything solid to show everybody else that's here. Okay, now I have an average between 5,000 and 20,000 people that come through my channels. I got 7 of them here going right at this moment. 7 channels going at this moment, but you're not giving me anything to share with people. You say you accrue money on bonds and preferred shares. Okay, great. Tell me which ones. I'll pull them up. I'll take a look at it. I am all for learning, sharing, and I'm very humble. If I'm wrong, I got no problem admitting it whatsoever. If you know more than me, hats off to you. But you actually got to step up and give me something that I can use, because you just saying, blurting out stuff doesn't mean anything. Michael G, what's happening? What software are you running in the back? I just dropped into the channel for the first time. Michael G, how you doing? This is not software. This is a trading platform called Thinkorswim, and it's through Charles Schwab. Now, Charles Schwab does have their own trading platform. They just so happen to have bought this when they bought out TD Ameritrade. And TD Ameritrade bought it off of Tom Sosnos, who is now running Tasty Trades. Very bright guy. Makes a lot of money. All right, so Boogeyman, I'm waiting for you to give me something good. And what type of Bank of America? Okay. Mikey said tiny diny. I have no idea what that means. No tech. Which stock is paying 6.2? Which one was that? That was Riot. Ask why. How are you doing today? Tied Up Ginger had a great chat today, mate. Bloody jolly good. I'm on board. Way to go, dude. Brian Spence wants to take a look at Whirlpool. All right. Appreciate you, man. Thank you. All right, Mikey G, I'm going to be here for all night. And by the way, Michael G, you're the second guy named Mikey G. Okay, because I got another Mikey G who's been here for almost every week for about a year. Comes, yes, I've been doing this for over a year. Here. Anyway, let's keep on going. All right, Brian Spence wants to take a look at Whirlpool, WHR. Let's go back to here. WHR. Didn't they just change to monthlies? They did. Now, Whirlpool, don't get me wrong, it's a household name. Everybody knows who they are. Monthly options, they just don't work for me. Sorry about that, Spence. Shannon, how are you today? Thank you for following along. Tasha, same to you. Carlos Santiago, que pasa, amigo? Bro, really? Yep, really, dude. Mary Kay Smith, how are you? Hello, Miss Mary Kay. Mac Daddy, what's going on? Lauren, thank you for that. Bull Market, cool beans. Hi, how are you? Hi, ho, all that kind of nice neat stuff. Thank you again, Miss Mary Kay. Mary Kay Smith. Is this FinViz? No. Now, I do use FinViz for a few things, not a lot, because they're not as detailed as I would like to have it. Okay, user 59387075405563. Why couldn't you name? Oh, you know what? I'm going to call you Fred. All right? Fred. Gordy here. Okay, sorry, Gordy. How do you roll it forward? Love your show. Ooh, how do I roll it forward? Good question. Now, Gordy, if you had a big screen TV, it might be easier to see. If you're on your iPhone, your iPad, your Metro, whatever, if you're on a mobile device, it might be hard to see. That's why this screen here is live on YouTube. Okay, the10minutetrader.com. Right up in the bio, you can go to my website, the10minutetrader.com. And The 10-Minute Trader on YouTube. That's where you'll find it. Uh-oh, here comes it. All right. How do I roll it? All right, let's go right there. Let's go here. Give it a second. There it is. Let's take a look at US Steel. All right, let's create a rolling order. Okay, so a rolling order. Now, the nice thing about Think or Swim, let's go backwards so you can actually see it better. Okay, here are the positions right here. I'm going to take my cursor, put it right on top of the one I want to look at, right click, drop it down, it says create rolling order. Then you figure out which one you want to roll forward. Okay, now here's the order. I'm going to buy back 21 March, which is this Friday, and I'm going to sell 28 March, which is next Friday. Okay, and then all these strike prices, what the price is, what the limit order is, blah, 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 all this stuff you can fill in, you can change, you can tweak it any way you want. But that's basically how you do it. You just right click, create rolling order. The computer does it for you, Think or Swim, and then you just fill in the numbers, what you want to do. Okay, I'm not doing this one, so that is a delete that one. Back to this one. All right. Hopefully that answered it out. So is that how Misty is doing it? To the left design. All right, think about it. To the left design. Okay, I tried to explain it as simply as I could. Okay, you go to work every day. You work 40 hours a week. You bring home X amount. Let's say you bring in $1,000 a week. You're bringing in $1,000 a week. How can you possibly give 150% of that away? You can't do it. It's physically impossible to give away more than you have. So how are they doing it? Well, they're taking money from new investors coming in and paying you that. I don't know how the hell they're doing it. Maybe Bernie Madoff is running it. Laura, Coca-Cola is good next week. Well, let's take a look at it. Miss Shelby, good evening, Miss Shelby, and how are you today? All right, Misty, oh, Coca-Cola. Let's take a look at Coca-Cola. Now, to be 100% honest with you, Miss Laura, I love Coca-Cola. They've been in business for 140 years. You really can't go wrong. But I think I traded Coca-Cola once in 20 years. Now I'm going to show you why. Because as great as it is, they are a dividend king. They have been in business for over 140 years. Coca-Cola can be found on almost every single continent on this planet. They're the #1 soft drink in the world. They don't need to pay good money. And I'm going to show you. See, here's the charts right here. Here's the high, here's the low. Look at, here's where it was, here's where it is. Look at this. Down, up, down, 69.40, which means the closest one's going to be the 70. And the 70 is going for 44 cents. That's just a tiny bit over 0.5%. Now, don't get me wrong, 0.5% can be good for some people. Mary Kay, thank you. 0.5% might be good for some people because 0.5% every single week comes to over 26% per year. And if you're okay with 26% per year on a company that's 140 years old, that have been increasing their dividends to their shareholders every single year for over 5 decades. Some of you people in the audience aren't even 50 years old, but this company has been increasing its profitability every single year. But I don't buy it because it only offers 0.5%. It's 26% a year. It's not bad, but you know, it is what it is. Mary Kate, thank you. Glad you like that example. Why ask why? It has been a little while. When you sell a call, are you hoping that it gets called away? Yes, I am. Sounds like money laundering with the company giving away 158%. It doesn't sound up and up, you know, because I don't understand it. I mean, I don't understand the math. How can you possibly give away 158%? Doesn't work. Mary Kay, thank you for that. BFF Journal, what's my take on Google? Okay. Where was it? I hit the wrong button, and when I do, everything goes way up, and I'm missing everything. What's my take on Google? All right. BFF Journal, let's take a look at Google. G-O-O-G. Okay, it's got weekly options. Here's the high, here's the low. Here's where it was, here's where it is. Look, it's up, down, up, down. Okay, it's currently in a downtrend at the moment, but I don't trade Google. Let me tell you why I don't trade Google. Nope, that ain't it. Nope, that ain't it. Hit the wrong button. See, I hit the wrong button myself. All right. Okay, Google. We're putting it into Yahoo Finance. You got to find yourself a good financial website. Never buy something you don't understand, which means, terribly sorry to do this to you, you are going to have to do some work. I mean, but think about it. You're working 40 hours a week, sometimes 50, 60 hours a week for 20, 30, 40, 50 years of your life. Do you think you can spend 15 or 20 minutes to find out, is it a good place I'm putting my money? Either that, just give it to someone else to do it for you. Okay, so here we are, Google. I want to take a look at historic prices, and I want to take a look at just the dividends. M. Kalidas, how are you doing today, M. Kalidas? Okay, so I want to look at dividends only, okay? And then I want to look at all the dividends this company has paid out. Now, the company's been around since 2004. 2004 until 2025 is 21 years. Well, look how many dividends they paid out in 21 years. 4. Not 80. It should be 80. Wait a minute. It should be 84. 21 years should be 84 dividends once every quarter. This thing hasn't been paying for 1 year yet. That's it. 2020, 2020. No increase whatsoever. Status quo. Yeah, no, thank you. That's my take on Google. Okay, BFF Journal. Live boxing, BORR. I never heard of it before. Okay, Bore Drilling Limited. Okay, so Bore Drilling Limited is not even a year old. Okay, January 24, well, it is a year old. Okay, but look at this. 5 cents, 5 cents, 10 cents, 10 cents, 10 cents, 2 cents. No. Sorry, dude. No. Gallant. Dude, haven't seen you in a while. How you doing? PPG. Ooh. PPG. Yes, I do like PPG. Gallant, haven't seen you in a while, dude. All right, here we go. PPG, here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, down, up, down. 1 to 13. The 113 is going for 55 or 85 to 120. Okay, you can barely get your 1% out of that. All right. Are you in the paid version of Yahoo? No, I'm in the free version of Yahoo. Okay, I see no need for the paid version because I don't use real-time data on my financial websites. Because I'm not a day trader. I jump in the morning and make my trades, I'm done and over with. I don't sit there all day. Now, if I sat there all day, yeah, I would get the paid version because and it would be handy. But no, I buy in the morning and then I sell a covered call and then I just look where it is. That's all. I mean, I don't want to pay for something I'm not going to use. Okay, so PPG. A year ago, we're at 140.36. The high of the year, 145.89. That was the beginning of April. Last 90 days, okay? High, low, where was it? Where is it? Look at this. Down, up, down, up, down, up. Same numbers. Last 30 days. Okay, here's your last 30 days. 30-day high, 30-day low, back up, back down. Now she's going up, but look what happened here. Now she was going to the upside, but today is a little bit of a pullback. Not 100% sure I like that, but what does it normally do? To find out what it normally does, let's take a look at the seasonality. Well, seasonality, which means how does it move? Ooh, holy shit. Do you see this? Come on, did you see this right here? Here's your bottom right here. Now she's going to shoot up. Well, hell yeah, that looks good. But is it guaranteed? No. There's only 3 guarantees in life. So here we go, right there to right there. Okay, so here we are right here. Now, the way it looks, it might be a better idea to jump in next week, not this week, because we had a little bit of a downward here before she shoots up nicely. But that's a choice for you. You know, I don't ever tell people what to buy. I don't really give advice. This is just my opinion. All right, so let's cut this back over to there. Let's get this over to here. And if we're going to do the 113s, covered call, 113, there it is. One contract. No. 28 March. Market order. And here we go. Buy one covered call of PPG 100. That's the weeklies. 28 March 25. That's next Friday. The 113 call option against the stock at the market to open. 2 trades. Buying stock, selling the dividend. 2 trades. Okay, here's the profit right there. 162.50 is costing 11 grand. Well, what does that look like? Calculator. 162.50 divided by 11, 138. 11, 138 and 16 cents. Well, no, that doesn't look good, does it? Let's go backwards. 162.50 divided by 11, 138, 16 equals 1.45. 1.45 of PPG. All right, that's if you like PPG. Never buy something you don't like. So let's go. We still got more questions over here. I just started running the wheel, really enjoying it. All right, Mikey. Don't get me wrong. The wheel strategy is a good strategy. A little complicated for what I'm doing here. Don't get me wrong. It's still great, though. And no, I don't do the future. I used to do the futures years ago, but Mikey G, here's a question for you. Okay, I've asked this question to every futures trader I ever talked to, and every single one says no. Do you know, Mikey G, this is for you. Do you know and have you ever used the Commitment of Traders report? It comes out every week. Very valuable information in that, and it's free. All right, let's keep on going. Neil, how you doing? Mary Kay, thank you. That's Silver Guy. Speaking of your long term, say the stock picks stay in the red during a 30-day. Do you wait till it's green past 30 days if necessary? Okay, so Silver Guy, all right? Now, let me show you something. See if you can grasp onto this. All right, let's get rid of this. Let's get rid of that. Let's get rid of this. Let's get rid of this, and back to here, and back to here. All righty, Silver Guy, you ready for this? I'm going to put Harley Davidson. H-O-G. Okay, here's Harley Davidson. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, sideways, down, up. Okay. Let's go. Whoops. $10.21. That means I bought it back in October 21 of last year. $35.79. Now I dollar cost average one, so I'm down to $35.62. Okay. Now this week, I bought it at 30. Are you paying attention? I bought it for 35. This week I sold the $26 call strike. That's way below what it's $9 below what I paid for it. So why did I do it? Well, let me tell you why. Okay. So, you see all this here? These are all the premiums I collected on Harley Davidson. Okay, $1.84, $1.84, 40 cents, 25 cents, 50 cents, $1.30, 42, 10, 20, 58, 58, 20, 25, 25. Where is it? Right here. Wait a minute. Yeah. 25, 25. Okay, 42, 22, 22, 30, 30, 30, 30, 15, 12, 12, 15, 15. Okay, 22, 28, 47, 25, 10, and 13. That's every single premium I've collected, and I also got the dividends every 90 days. So every 90 days, I collected a dividend, and every 7 days, I collected one of these premiums. These are all the ones I collected. Now, you think red is bad. No, 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 no. Green is buying, okay? Okay? This is buying. This is selling. That's all that is. That's not good, and that's not bad. It's just I bought, I sold. All right? I sold. It's not, okay? So yeah, if the stock goes down, I do sell covered calls against it, and I will continue to sell covered calls against it until I will continue to sell covered calls against it until it goes and hits my 35.60. I have no intention whatsoever selling this thing. I will keep it to the day I die and bring in a premium every single week. I look at my stocks twice a day, once in the morning. Now, I do have a paid morning trading group. I'm not going to try to sell anyone anything, so don't try to think I'm on a sales pitch. But I do have a paid service where people get to watch over my shoulder as I trade, asking you whatever questions you want 5 days a week, every single day, every single trading day. So you can ask any question you want for a whole month, monthly service. Anyway, so besides the point, I have no intention on taking a loss at all this year. I have 0 losses. Okay? See, lost, nope, I still got it. 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 Nope, I still got it. Nope. Well, that's actually a profit. But anyway, besides the point. Okay, it looks like a loss on paper, but I have no intention on selling at a loss ever. Oh, when you place a covered call market order, isn't it possible that you get the stock at a higher price than the strike price of the call? Not really. Let me briefly explain it to you. Okay, let's look at Harley Davidson. Why not? Change this. Covered stock. We don't want that one. There's only 2 days left. Doesn't really work. It's at 26.38. So we'll be doing the 27s right there. One contract at the market. Okay, now, you see what here is? Buy one covered call, Harley Davidson, 100, that's the weekly, 28 March 25, that means it expires next coming Friday. The $27 call option against Harley Davidson at the market to open. Now, I am buying and I am selling at the exact same time. The reason why I do it at the marketplace when I'm entering, a market order will fill at 9:30 a.m. The stock and the option are tied together. I already know exactly what I'm making. I'm making $195 off of a $2,500 investment. Well, let's find out. Calculator. Come here, Mr. Calculator. Okay, 195 bucks. Okay, that's the maximum profit right there. Max profit, 195. Okay, well, what is my cost of trade, including commission and fees? $2,505.66. Okay, divided by $2,505 and a whopping 66 cents. Whoops. Gives me a grand total of 7.78%. How can that be right? Okay. They're tied together. The stock and the option are tied together when you're buying it at the market. Now, if it was a limit order, totally different thing. Because a limit order can actually sit in the market maker's computer all day long and not get filled. That silver guy, no, I don't wait 30 days for anything. I want to bring in something. If I bring in a nickel, don't care. Because a nickel every single week for 52 weeks, I'd rather have something coming in than nothing. Mary Kay, this is very informative. Love it. Thank you, Mary Kay. Neil, what's in that tea? Well, this is ginger tea with honey. Because I'm not used to talking so much. I mean, don't get me wrong, I love talking to people. But when no one's talking back, I'm just talking to myself, reading screens. I got 1, 2, 3, 4, 5, 6 screens I'm reading. Okay, so what am I reading? Okay, you know, I'm not used to talking so much, so it's good for my throat. Last year, I almost lost my voice. I was like, oh, damn. Anyway, let's keep on going. Bob Gibson, how are you doing today? Neil, I was thinking the same. I just went to make some tea since seeing him drinking this. Well, mine has ginger and honey in it. Okay, the ginger settles my stomach and the honey soothes my throat. And I think it's specifically one of those herbal teas. What's your Thinkorswim setting that has the list of dividend dates besides the chart? Okay, Angie, honey, we can do this all night long. It's easier for me to show you, okay? I have no problem whatsoever doing a Zoom call with you. So, Kohl's cut its dividend. How does that factor into your company history? Not doubting, want to learn. All right, so here's the thing. Now, I've been trading Kohl's for a year and a half. It's simple, it's easy. I know the flow. And yeah, they dropped their dividend, but I'm still following the flow. So eventually it probably will end up getting kicked off my list, but as long as I'm making 1 or 2% every single week, I'll continue to trade it. And you're absolutely right. You know, it does go against it. Now, whatever happened to that dude who's supposed to be showing us that his broker gives him dividends every day? Whatever happened to him? He just disappeared? You call somebody out and they just disappear on you. There he is, Boogeyman. I sure will share it. All right, let's hear it. Today, every dention. What the hell is that? I never heard of it. Give me the ticker symbol so I can look it up. Maddie, XHLD. Oh my goodness. Maddie. Let's get out of here. Let's get out of there. Let's go out of here. Let's get back to here. Now, he said Avery Dennison. What the heck is Avery Dennison? Avery Dennison. Well, I got a little bit of problem with that. All right, Avery Dennison Corporation right there, 179. Okay, dude, it has monthly options. Okay? I don't know how you get paid daily on a monthly optionable stock. AVY. AVY. I don't know about you, but that's quarterly dividends. March, December, September, June. March, December, September, June. February, December, September. Yeah. Those aren't daily, dude. That's quarterly. That's every 90 days. So let's go all the way back. How far back does this thing go? 2004, 21 years. Cool beans. 37, 38, 39, 40, 41. 41 in 2007. 41, 2008. 41, 2009. What am I missing? 41 for 3 years? Holy shit. In 2009, they cut the dividends by 50%. Okay. They cut the dividends by 50% in 2009. 2010, still 20, didn't increase. From 2009 to 2010, no increase. 2011, 25 to 27 to 29 to 35 to 37 to 41 to 45, 52, 58, 62, 68, 75, 81, 88. Okay. I got a little problem with that. Number one, it's 21 years old. Number two, it's not consistently profitable, not increasing every single year. Now, close to every single year. I can give you a little bit of slack on that one, but I can't give you any slack here. Okay? 2009, okay? Boogeyman, 2009, it was at 41. 2010, it's at 20. Now, I don't know where you went to school in your math, but that, my friend, is a 50% decrease. 50% decrease. Not an increase, decrease. And that's a quarterly. That's not daily. Now, when you said you got dividends daily, I'm still waiting to see the numbers. Maddie, XHLD. XHLD. All right, Maddie. There are no dividends in the selected time period. So I'm going to say no to XHLD. Sorry. Ooh, Ashok Kumar, APA, Apache. I like that one. Hold that thought. Grady Brooks, stock crash. Okay. Mitch King. When you place a covered call market order, isn't it possible? Yeah, we already did that question. All right, Vamp Fang. Hello, sir. My parents think online earning is a scam, but I'm looking forward to retiring as I'm sick of studying. Should I quit college? Dude, I can't tell you that one. Terribly sorry. Now, the way you're talking, okay, your parents think it's a scam. Okay, I don't agree with your parents, but some of it is a scam. Now, I always believe, never believe anybody on YouTube. Never believe anybody online. Do your own research. Does it make sense? I can guide you to water, but I can't make you drink it. Think clearly. Do some research. Don't listen to me. You don't know me. Okay? I'm just showing you my opinions. I'm just reading stuff from online. Now, some stuff I believe online, like when when Yahoo Finance tells me this is the information, I have a tendency to believe them. Yahoo's been around for decades, since the beginning of the internet. I believe them when they tell me this is the stock price, this is what it did today, and this is what these numbers look like, and there's no dividend. See, I believe that. You, on the other hand, should research everything. And question everything. Don't blindly listen to anybody online. Do your own research. Take responsibility for your own actions. I cannot tell you to quit college. I didn't go to college because it wouldn't do me any good. I did the service, and then after the service, I started my own company. All right. Ashok Kumar, APA. I love APA. I do. So let's take a look at APA. Apache. APA. All right, so Boogeyman, I'm going to give you a little bit more time to show me where and how you get daily dividends. Because Avery Dennison pays quarterly dividends every 90 days. And they cut their dividends 50% back in 2009. So I'm a little bit doubtful of what you're saying. But I'm going to give you a little bit more rope so you can hang yourself. Not that I'm telling you to do that. Anyway, Apache. Ooh, look at that. That looks awesome. The high of the year, the low of the year. Where was it? Where is it? Look at the movement. Up, down, up, down, up, down, up, down. Now it's going back up again. We're at 2081. The 21s are going for 43. That is over 2%. Well, 2% is great, in my humble opinion. Because 2% every single week is over 100% for the year. Well, I can live on 100% a year. Who do you got here? Wise Family Living. Back here again tonight. How are you guys doing? Those health drinks. Supposed to make you healthy. Anyway. All right, so let's take a look at Apache. Because it looks good so far. A year ago, Apache's at 32.64. The high of the year, 36.14. Well, look at the last 90 days, which is the last 3 months. Okay, same thing. The high, the low, where was it? Where is it? Look at it. Up, down, up, down, up. Well, look where the high is for the 90 days. Even here, the 24. It's got a long way to go before it even comes to either one of these highs. So it looks good on the 90-day chart. But what does the 30-day chart look like? Because 30 days is going to give us a better idea of what we think is going to happen over the next week and a half. 30-day high, 24 bucks. 30-day bottom, 17. Now from 17, she jumped up to 20.81. Well, that's a nice movement. But she's still got a long way to go to challenge that 30-day high. Can it? Yeah, it can. Is it going to? I don't know. We'll see. Okay, but I like the way it looks. So let's take a look at for the 21s. Okay, covered call. 21. There it. Yep, right there. 21. One contract. Market order. And here we go. By one contract, covered call. APA 100, that's the weekly. 28 March 25, that's next Friday. The $21 call option against the Apache stock at the market to open. 64 is the profit, 2,000 is the investment. Let's get out that calculator. 64.50 is the profit that we're making. Divide that by the purchase price, cost of the trade, including commissions and fees. 2036, 2036, grand total of 3.1. Holy shit. Nice. Okay, let's get out of that. Out of that. And back to where we begin. So Apache looks pretty good. I get 53 comments. All right, give me a minute. I'm going to answer some of these up. Aiden James Allen, how are you doing today? SBR. What the heck is SBR, dude? SBR. Dude, that has no options. Okay, yeah, this is a stock option trading class. We're looking at options. If it has no options, no thank you. Sorry, dude. But, you know. Laura. When do you suggest to buy Apache? Okay, Laura, I just told you I don't make any suggestions. I don't make any recommendations. I just show you the numbers. Okay, I can show you the numbers, but you are going to have to step up to the plate, take responsibility, and say, hey, this looks good. Let me do my own research. Okay, I can show you what I can show you based on what is available here. Okay, you can look at the numbers any way you want. Go to Yahoo Finance, Google Finance. You can go to Robinhood, Webull, wherever you trade your stocks. Kells Grow. Thoughts on ExxonMobil? Ooh, nice. Chuck. Oh my goodness, Chuck, you are new here. I can tell. See that? Oh, now I'm depressed. You want me to look at SMCI? Every week, somebody wants me to take a look at SMCI. How about I just say no? How about I say, Chuck, do yourself a favor. Go to Yahoo Finance, go to Google Finance, go to any financial website. And seriously, take a look at the numbers on SMCI. What is the current yield for the year? Are they consistently profitable? Do they increase their profits every single year? Anyway, let's keep on going. ExxonMobil, XOM. I like ExxonMobil, but I'm going to say no to ExxonMobil real quick. Did you see that? No, when I look at a chart, it takes me 2 to 3 seconds to find out everything I need to know. It might take you guys 3 to 4 seconds. And don't kid yourself, you need longer than that, because you don't. Okay, you take one look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look. Up, down, up, down, up, down, up. Right here. Okay, this is higher than the 30-day high. I don't like 30-day highs. Okay, 30 days ago, we're at 110. Here's our bottom right here, 104. Well, now it's at 115. From 104 to 115 is an $11 move. $11 on a $104 stock, that's over 10%. A 10% increase in 2 weeks, yeah, there's going to be profit taking, and it's a 30-day high. Me personally, never once have I ever heard somebody say, hey, look at ExxonMobil. It's at the high of the time frame. Let's buy some and wait for it to go higher. Yeah, no, I never heard that one. I always heard buy low and sell high. Never buy high and wait for it to go higher. Yeah, no, I've never heard that one. Sorry, kiddo. Don't get me wrong. I love ExxonMobil, and I'm actually going to write ExxonMobil down for 2 weeks from today, because I think that after the profit taking is done, it'll take about 2 weeks to get back down into this area where it'll look attractive to me. Now, it is on my list, but I only want to look at it when it's a buying opportunity. Right now, it's a selling opportunity. I don't own it, but I'm going to look at 2 weeks from now. Oh, I have it down for next week. All right, Chuck. I'm going to do you the favor. Let's take a look at SMCI. Because he asked nicely. Now, Chuck, I don't know who you are, and I don't want to make you feel bad, but you are going to feel bad. Sorry, dude. Right now, it's at $40.10. Okay, look at this, Chuck. There are no dividends in the selected time period. Okay, so I'm not quite sure why you would show up at a dividend investing show. That basically says dividend investing for weekly cash flow, and then suggest a stock that has no dividends. Okay, Chuck, sorry about that. Boogeyman, Westlake, Equinix, and Electronic Aris. I never heard of any of those. Okay, give you the benefit of the doubt. Westlake Corporation. Another monthly optionable stock. Okay, dude, all right, I don't do monthly stocks. monthly optional stocks because there's no possible way for me to get weekly cash flow from a monthly optional stock unless I was willing to sit in front of my computer all day. No, that ain't happening. So let's go to here. What was Westlake's ticker symbol? WLK. Never heard of it. WLK. All righty. Look at that. 21 years of dividends. All righty. 2004, 1 cent. 2005, 1 cent. 2006, 1 cent. I got a problem right there. Right there. The very, very beginning. 3 years, no increases whatsoever. Boogeyman, I don't know. 3 years, no increases. 2006, 2. Then it goes to 3. 2007. 2008, it's 3. 2009, it's 3. 2010, it's 3. 2011, it's 3. Dude, that was 5 years, not a single increase. Explain to me in a manner which I'll understand why a company cannot increase its profitability for 5 years. Okay? Then it goes to 4, to 9. Now, I'm going to call this one a special dividend, 197. I'm going to ignore that one. Okay, it goes 4, 9, 11, 13, 17, 18, 19, 21, 25, 26, 27, 30, 36, 50, 53. Okay, so from 2013 to currently, that's 12 years. Doesn't impress me. Equinix. Summary. Let's go to summary real quick. Okay, dude. Okay. 1.98 does not impress me at all. 1.98 for the year. See, it says right there. Okay. Westlake, $2.10 dividend for the year, 1.98% yield. Doesn't impress me. I'm looking for 1% a week, and you're showing me something 1.98% a year? No, doesn't work for me. So let's take a look at another one. Equinix. Never heard of that one either. EQUI. Equinix. Nope. Equinix. Okay, Equinix is not, what the hell is that? Equinix Inc., 1.45, 2.0, Equinix Europe, Equinix 2.5, 1.55, 3.4, 2.95. Dude, I have no idea what the hell that shit is. Electronic Aries. Okay, that one's not popping up either. Electronic Aries. Okay, this one's not popping up either, dude. Okay, not impressing me at all whatsoever. Sam, check out CIVI dividends. Already did that. That's a no. Boogeyman yesterday, United Health. I'm not going to play this game anymore with you, dude. McDonald's is a quarterly. Duke Energy is a monthly. Analog Devices, yeah, no. Okay, they do not pay. No, I'm just not going to pay attention to you anymore. Catherine, I know you. You do? Cool beans. Catherine, I'm kind of curious. Where do you know me from? Because I know a few Kathleen's or Kathys, but Catherine, Bonjour from Montreal. Comment ça va? Bonsoir, Luc. Ça va bien? No? Okay. Sean Cam, right to the point. Great stock. Okay, Sean Cam, I have no idea which one you're talking about. Because I'm looking for what you put in and I don't see anything. Oh, MTN. Isn't that Mountain Energy? I mean, no, Mountain, what do you call that? Green Mountain Coffee? MTN. MTN. Oh, Vail Resorts. Yeah, no. Okay, 21 March, 17 April, 18 July, 19 September. That's a monthly. I don't do monthlies. The numbers just don't work. You know what? You guys are probably tired of me saying that. Okay, so let me just show you. Okay, last 30 days. Here we go. Here's your last 30 days. 30 days ago, we're at 160. The 30-day bottom, 152. 30-day high, 167. She drops down. Now she's got 1, 2, 3, 4, 5 days to the upside. Great. Well, it looks like it's going up. Well, wonderful. It's currently at 163.96. Now, we can't buy tomorrow. I mean, this week's the 21st. So we have to buy next one, 17 April. So let's take a look. 17 April is 29 days away. So you take 29 and you divide it by 7. That's 5 weeks. So I got to get at least 5% off of this thing. So let's see if it does offer 5%. Okay, so right now the 165 is going for $4. Okay, so let's take $4 and divide it by 165. 165. Grand total of 2.2%. Now, didn't I say I needed 5%? This is offering 2.4%. That's a 0.5% per week. So a 0.5% per week is only 26% per year. Nah, it doesn't work for me. But here to make things a little bit more complicated, okay? We got 29 days until this expires for it to hit my target. Okay, 29 days, that's 5 weeks, 7 days in a week. You can't do half weeks because, you can't do it. All right, so here's 30 days. Great. Now, here's your 30 days ago. Here's the 30-day low, 30-day high. Okay, she went down, up, down, up, down, up. Okay, great. Now, tell me where is it going to be in the next 30 days? Based on this right here, where do you think it's going to be in 30 days? 5 days might be easy. 30 days, no, it ain't that easy because it looks like it's going to go up. But from a 30-day bottom here at 152, 166 is $14. So from here to here is $14. Well, $14 on a $152 stock is a little bit less than 10%. So it goes up 10% and it pulled back. Okay, great. Well, look where it is now. Where do you think it's going to go next? The next 30 days. It's not that easy. And it's only giving me 2.5% for a month. Yeah, no, it doesn't work for me. 1% a week comes to 52% per year. 2.5% per month comes to 25% per year. Hey, you want to do 25%, more power to you. You want to figure out it's here, where's it going to be in 30 days? Well, this is 30 days. Okay, so 30 days, yeah. No, I don't, monthlies just don't work for me. It's just plain and simple, and I don't know why people keep asking me about them. Isn't Bernie dead? Yeah, but that sounds like something Bernie would do. Brady Dufresne, Pepsi. Now, that company's been in business for over 100 years, and they are a dividend king, which means they've increased their dividends for more than 5 decades. Okay, the high, the low, where was it, where is it? Look at up, down, up, down, up, down. 148. The 149 is going from 137 to 162. So you're only getting 1% out of Pepsi. Now, we came up with, hold on a second. 1, 2, 3, 4, 5, 6, 7, 8. 8 companies going over 2% this week. PPG is 145, Walmart's 1.3, Morgan Stanley 1.4, Macy's 1.3, Citigroup. Anyway, so on and so forth. Yeah, Pepsi 1%, it doesn't thrill me. I would do Citigroup at 2% over Pepsi any day. Kells, how's it going? So let's keep on keeping on. Brady Dufresne, Armstead, Cool Beans, Madhu Ayuza, the South African Mountain, Cool Beans. Do you know? Uh-oh. Uh-oh, I missed. Anytime I touch this screen, they all disappear. All right. Do you know Continental Tires has dividends? Don't know. Siege, typo, excuse me. All right, no bond siege. Augie Dog, what company are you talking about? Pepsi. Hassan Pfeffer wants to take a look at Hewlett Packard, HPQ. HPQ, Hewlett Packard. All right, let's try that one more time. HPQ. Here we go. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, sideways, down, up, 28.76. We look at the 29s. The 29 is going for 37. That's more than 1.5%. Okay, simple, 1.5%. I like Hewlett Packard. Let's take a look. A year ago, Hewlett, it's getting scratchy again. A year ago, 29.75. The bottom of the year, which is towards the end of April, 27.46. Jumps up, goes sideways. Here's the high of the year right here. High of the year, 39.80. Last 90 days, which is the last 3 months. Okay, the high, the low, where was it? Where is it? Look at this. Sideways, up, big drop, and now she's back up again. Okay, last 30 days. 30 days right there. So here's your 30-day high right there. Here's your bottom. Look at that. Boom, and now it's going up. Yeah, that looks good. But what does Hewlett Packard normally do this time of year? Interesting. Shoots up, pulls back, shoots up, pulls back. Kind of wavy all over the place. That's a lot of action going on. Basically, it just gives me an idea that no consistency there. But look at where she is. She's at the bottom of the 30-day period. Up, down, up. That looks like something worthy of getting into if you don't panic right here. Shoots up, pulls back. Yeah, don't panic. Just give time to retrace. Now, is that guaranteed? No, not guaranteed at all. There's only 3 guarantees in life. Okay, you ready for this? Some of you guys are going to really like this. 3 guarantees in life. Death, taxes, and disappointment. Get used to it. You're guaranteed to be disappointed about something. Do I teach drips? Yeah. What don't you understand about Ask Once? Thank you, Laurie. Good evening. I couldn't get on until just now. Lisa M., how are you doing tonight? All right. Question I heard. A will give you a dividend every month. Is that true? AI, why? Why would I want to do that one? AI, why? Okay, no name. It actually has no name there, but AIYYY, we cannot find that symbol. So more than likely, it's not a U.S. company. So I'm not looking at Canadian companies. I'm not looking at companies overseas. If it's on the U.S. stock market, it will come up on Charles Schwab. How do you feel about Motley Tips? I don't. Okay, so Neil, thank you for the question. I don't even, I knew who Motley is. All right. I may have read them like 10, 20 years ago, but ever since my 9-year-old daughter, now you guys, some of you guys don't know this, but in 2008, my 9-year-old daughter says to me, Daddy, what are you doing? Can you teach me? Say, how do you teach a 9-year-old how to invest in stocks? Well, I'm certainly not going to have her read Motley Fool. No, that ain't going to happen. Okay, so what I want her to do is only stick to companies that are continuously profitable. Dividend kings, dividend aristocrats, dividend champions, dividend contenders. We'll throw in Warren Buffett's list just for the fun of it. Now, those 5 lists right there will give you 300 companies that are consistently profitable year after year after year. Now, we did check the other day on Monday. 9,970 different companies you can choose from. That's a lot. That's almost 10,000 companies you can choose from any day. So why would I want to invest in anything that's not continuously profitable? Well, how do you figure that out? Well, lucky for us here in the United States, there are a bunch of other people doing our homework for us. What do I mean? Well, there are a couple of people or a couple of companies that actually track who consistently increases their dividends. Well, they have a list, and it's called the Dividend Kings. 54 companies that have continuously increased their dividends every single year for a minimum of 5 decades. Okay? GPC, Genuine Parts Corporation, 7 decades. That's 70 years. I'm not even that old, and they've been paying dividends and increasing them every single year since then. Well, that's a lot. Okay? So with 9,970 different companies, wouldn't you want only the best of the best? I mean, think about it. Are they profitable? Are they continuously profitable? You work hard for you. Most of you do. Okay? I can't say everybody because I don't know who's here. Okay, there might be some trust fund babies, or there might be someone who just, their father gave them a shitload of money. They might be here. I honestly don't know. I have no idea who's who. But I know I've been working, me personally, I've been working since 1973. I retired in November, not last year, but the year before. So I've only been retired for about a year and a half. But I've been investing since the 90s, okay? The mid to late 90s. So I've seen a lot in the past, 30 years, 20 years, 30 years, something, whatever that is. Yeah, about 30 years. I forget where I was going with that. Don't get old. It's not as easy as people think it is. All right. Can we look at Ford? New Jersey, of course we can. So Neil, to finish up your question. Okay, when my 9-year-old daughter asked me to help her out, I said, fine. So I had to come up with some rules. Rule number 1, never buy something you don't understand. Okay, for her, it was simple because I told her, I said, honey, if it's not on the calendar, don't even bother with it. Okay, that is it. So the only thing my daughter got to look at was companies that had 25 years or more of increased dividends. Other than that, she doesn't even know some of these companies existed. Why should she? There's 9,970 of them. Do you really need to know all of them? No. You only need to know the ones that will help you on your road to wherever the hell you're going. And you got to figure that out for yourself. No one's going to help you out. Now you get 2 choices in life. And do not kid yourself that you have more. You've got 2 and that's it. Do it yourself. Joe Sullivan, what's happening? Take responsibility and invest your own money. Learn how to invest your own money. It's not that difficult. 2, give it to someone else, let them do it. That's it. Do it yourself or give over that responsibility to someone else. Okay? Now, from what I've seen, Okay, I'm only 61, so I haven't seen everything. I've seen enough. Okay, nobody has more interest in your money than you. So why would you hand over your money to someone else? Eddie, peanut butter and raspberry, huh? Well, let's take a look at it, peanut butter and raspberry. PBR. PBR. All right, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this one. She goes up, she goes down, and then she just goes channels. Just channels sideways. See that? Just sideways. And here's the bottom right there. All right, so let's take a closer look. But before I do, what's the current price? 14. The 14s are going for 26 cents. Okay, a little bit less than 2%. All right, well, let's take a gander. A year ago, we're at 14.55. The high of the year was the beginning of May 1741. And then she falls to this range between 13 and 15. It just stays there all year long. Okay, last 90 days. Okay, here's your last 90 days. Last 3 months. The high, the low, where was it? Where is it? Look at this. Up, down, up, down, up. Yeah, this is going to be a no. I can tell by right there. 219. I don't know. Maybe. Maybe. Look at that. 30 days. High. Here's your bottom. Now she's going up. Maybe she could keep going up. If you like this company. It always comes down to, does it make sense? That's number one. Number two is, do I like this company? Number three is, do I like this company at this current price? And number four is, am I willing to hold on to this company until it hits my target? Well, what's your target? Okay, you could do the 14s. You could do the 1450s. You could even do the 1350s. It's always a numbers game. It's a balancing act. What am I paying for it? What am I selling against it? Is it going up? Is it going down? What is the momentum? Jersey wants to take a look at Ford. Here we go, Jersey. Ford. Now, I do have some Ford. Why am I looking at that one? That one shouldn't be on there. Okay. Ford. Here we go. Here's the high. Here's the low. Here's where it was a year ago. Here's where it is now. Look at this. Up, down, sideways, down, and then up. Okay, 1024. Now, I'm into this one at 935. So mine's going to be gone this week. Fine by me. Okay, I have no intention on keeping it. Okay, so here we are. A year ago, 1220. The high of the year back in the middle of July at 1489. Last 90 days. Okay, here's your last 90 days. Here's the high, here's the low. That's where it was. Here's where it is. Look at this. Up, down, up. Yeah. I don't want to hold on. Excuse me. I don't want to hold on to it anymore. I still have it. Okay. What do you think? 30 days ago, look at where it is. I don't want to buy at the high of the month. No, thank you. Don't get me wrong. I own it, but more than likely it's going to go bye-bye this week for me. Worm. BR Worm. How you doing? Richie off. Could you look up SRFM? What is SRFM? SRFM. There are no options. Sorry, Richie. It's going to be a no. That's a no, Richie. That's a no. Ooh, we're at 11:18. Holy cow. Coach C, what's happening? To the left design. What are the 3 guarantees in life? Oh, come on. You got to make me say it again. The 3 guarantees in life. Are you ready? Death, taxes, and disappointment. Thank you there, Richie. Augie Dog. Don't you think if seasonality was a real signal, it would be priced into the call itself? No. You like that one? Okay, so Augie Dog. Seasonality is looking in the rear view mirror, just seeing what it's done in the past. Okay, hold on a second. Let me show you something. Shit. I don't know the ticker symbol for Weight Watchers. Damn it. HSY, Hershey's. Okay. Do you see this right here? Hershey's. Okay. End of January, first couple weeks of February, goes up every single year. Why do you think that is? Okay. Hershey's stock, they do chocolate. What's the number one chocolate day of the year? Well, isn't that Valentine's Day or Easter? One of those. You have Valentine's Day in March. February. Well, what do you have in April? Easter. So Hershey's goes up the first and second week of February. Weight Watchers, I wish I knew the ticker symbol, but I don't know it. WCH, is that it? I don't know. But Weight Watchers goes up the beginning of the year, every year. Why? Well, because people want to do that diet thing in the first of the year. So certain stocks move predictably every single year. That's why it's called seasonality. And it's not built into the stock price, and it's not built into the option price. Okay, the option price is figured into what's called the Black-Scholes standardized pricing method for options. That's what it's called. Black-Scholes pricing method for standardized options, something to that effect. It's a huge mathematical problem. And seasonality's got nothing to do with it. So let's keep on going. Gallant wants to take a look at United Airlines. All right. UAAL. AAL. Here we go. Okay. A high, a low. Where was it? Where is it? Look at this. Sideways, down, up, down. Now up again. Now where are we right now? We're at 1150. Okay. So the 1150 is going for 32 to 36. That's almost 3% for American Airlines. So the question would be, do you like American Airlines? Do you like it at this price? Now, Gallant, terribly sorry, we can't look into the whole thing only because it is 11:22, and I got a whole bunch of questions to go through. Now, I do answer each and every individual question. Usually around 11:15, I stop looking at stocks and just answer questions. So, Gallant, I haven't seen you in a while, buddy. Nice to see that you're still above ground. That's a good thing. Okay, Augie Dog, what if PPG goes down 10%? Okay, Augie Dog. Let me see if I can, I'm going to take a sip of my tea for a second, and then I'm going to see if I can say this diplomatically. Something got stuck. There you go. That's that ginger. You grate up the real fresh ginger. Yeah. All right. Augie Dog, are you ready for this? Rule number 1, never buy anything you don't understand. Now, what do I mean by anything you don't understand? Do you see this right here? This is called the summary of a stock. Okay, the previous close, the open, the bid, the ask, the high, the low, the days range, the 52-week range. See the 52-week range between 100 and 162? If you don't know what the range is for the stock, because some stocks can fluctuate from 10% to 70%. It can take a 70% reduction in price. 162 is the high, 100 is the low. That's just for this year. Okay, some stocks have already dropped. Let's take a look at Kohl's, 30 bucks. Now it's down to 8. Okay, 30 to 8. That is a 75% decrease. 75% decrease. That's not a 10% decrease, buddy. That's a 75% decrease. Yeah, I still bought it. I still own it. I'm still buying it. Why? Because the numbers make sense. Okay, can the stock drop? Yes, it can. This is not a game for the weak at heart. If you don't know what is possible, yes, the stock can drop up to 50%, up to 60%, up to 75%. If you're not ready for that kind of numbers, don't play this game. This is not for everybody. Okay, this is an adult game. Put your big boy panties on and just say, hey, if the stock drops, that's what it does. Look what it does. It goes up, it goes down, up, down, up, down, up, down, up, down, up, down. That's all it does. It goes up, it goes down. That's all it does. Where do you get in? Where do you get off? Okay, so now I'm into Kohl's, I think at 16. Right now, it's at 8. That's a 50% drop. Do I have any intention on selling at a loss? Nope. Do I collect more than 1% on my position every single week? Yep. Am I going to continue to hold on to it and continue to collect 1% every single week off my calls? Yep. Okay, it's a game. Learn how to play the game. If you're not ready for the risks that are involved, don't play. And you're not risking 100%. Okay, now you just said, what if it goes down 10%? Well, 10% is not 100%, dude. Dad Statics, if I had $100,000 to invest today, where would you put to get 10% return this year? First of all, Dad, you're new here. Okay, I have an account. Hold on a second. You haven't seen this yet. You haven't seen this yet, Dad. Okay, so this is one of my channels here. Now, here's my profit and losses on account number 1. I share 3 accounts publicly. Account number 1, account number 2, account number 3. Okay, account number 1 averaged 2.29% per week last year, 2.2% average per week, and 1.2% average per week. That was last year. Okay. This account here started off with 117. I dropped in another 21 to give me like 130. But my average, what I'm looking to get on this one right here, $140,000, 1%, is $1,400 a week. $1,400 a week off of a $140,000 stock. So you got $100,000. If I had $100,000, I'd be looking to make $1,000 a week. That's 1% per week. 1% per week is over 50% per year. So when you're asking me where would I put my money to get 10% a year, I'm telling you you're in the wrong place. Okay? I'm looking for cash flow. I'm not looking to put my money somewhere and watch it. No. I trade my money every single week. Every single day that stock market is open, I'm looking. Because if I had a garden, I'd be out there every day pulling the weeds. If I had money invested, I'd be looking at it every day, seeing what's going on. Now, I don't spend hours every day, okay? So, don't get that thought out of your head, okay? I did 10, 15 minutes a day. That's it. What did I buy? What's it at? What's the chance of me losing money on this one? Okay, my number 1 objective, consistency of profitability. I want to make 1% every single week. All right, anyway, let's keep on going. Hola, guapo. ¿Qué pasa, amigo? ¿Cómo está? Hasenpfeffer, PPG, 7% profit seems low. Hasenpfeffer, that's funny. Neil, how you doing? Hi, Rizzo, nice to see you. Jimmy M, what's going on? Augie Dog, fundamentally, that is not a great stock. Slowing economy, demographic headwinds, rates staying high. All right, Augie Dog, thank you for your input. That wasn't a question, it was an observation, but thank you for that. Jason 40, how are you doing today? Richie Off, You could look at SRFM. Already did. Already said no until it goes to 0. Yep. Thank you for that, Augie Dog. I'm not quite sure. Are we still talking about Coles? Because Augie Dog, you missed it earlier when we actually looked into the fundamental of Coles. Coles has a $135 per share profit or cash flow. Sorry. Cash flow on Coles, $134 per share. Eddie, PBR, we already looked at it. Thank you, Hassan Pfeffer. Mac 2, did you learn all this yourself? Yes, I did. Richie, you could look up, stop it, Richie, please. Share your thoughts about Tom Sosnoff. I don't know Tom Sosnoff. I've seen him on videos. That's about it. I've watched some of his podcasts. Other than that, I don't know very much about him at all. Toasted Toaster, how you doing? Nice to see you. Life is good, Mac. Oh, life is good, me see. Okay. Your take on Play. Is Play a stock? I never even heard of it. Play. It is a stock. Well, imagine that. Okay, unfortunately, who asked me about that one? Okay, life is good. All right. 21 March, 17 April, 16 May, 20 June, 18 July. Those are all months, dude. I don't do monthlies. It just, the numbers just don't work. Okay? I appreciate your interaction. I appreciate you asking questions. I don't do monthly optionable stocks because you can't get weekly cash flow from it. I get monthly cash flow from it, but I'm retired. I have plenty of time to kill and do nothing. So yeah, every morning, 10 to 20 minutes, I'm managing my own money. 10 to 20 minutes, that's it. But think of it this way. 10 to 20 minutes a day, it's about an hour a week. Okay, so I just showed you one of my accounts, $140,000. So an hour a week to make 1%, that's $1,400 an hour. Hell, I never got $1,400 an hour working for a living. So yeah, I got no problem whatsoever spending 15, 20 minutes a day looking at my own account. Life Boxing, thank you for that. Okay, life is good, PLTY. You have to ask me tomorrow, dude. We're past 11:30. I'm only here now just to answer questions. I'm not going to look at anything else. But PLTY, I'm not 100% sure who that is. Eddie, that's a no. I've asked before. Thanks, Silver Guy. Empower Athletics, nice to see you. Andrea, nice to see you. I will vouch for Shames. I didn't start making money until he was generous enough to give us his time for free. Thank you, Andrea. I appreciate that. Alice, what symbol is that? PLAY. Oh, that's Dave and Buster's. They haven't been around for 20 years. How can I get a mentor who doesn't take a lot of money? Well, Lightden, I tell you what. Drop me your number here. Not here on the screen, but go up to the, what do you call it? Right up here at the top left. Click on my picture right there. DM me with your phone number. I'll give you a buzz. We'll take a chat. Okay? Augie Dog. There's always one person, Augie Dog. There really is. Okay. Let's see if I can make this make sense to you, Augie. So you're saying risk $2,000 to make 64. All right. So the way you're making it sound doesn't sound good at all. Okay. Now, the way I like to look at it, you can look at it any way you want. You know, you can get 10 people at a traffic section witnessing an accident, and you'll get 10 different stories. Okay, you're thinking of risking 2,000 to make 64. So let's get the calculator up for a second. Clear. $64 divided by 2,000. That comes to 3.2% for a week. Okay, now 3.2% per week. You're risking. No. You're not risking, you're investing. Huge difference. Now, when I say, Augie Dog, listen closely. When I say rule number one, Never invest your money into something you do not want to buy, own, and hold for the rest of your life. If you do not like Ford, don't buy it. If you do not like Macy's, don't buy it. Okay, Nordstrom's, Kohl's, IBM, AT&T, General Motors, Home Depot, Lowe's. If you don't like those companies, if you do not want to invest in those companies, don't do it. You're not risking, you're investing. This is a huge difference. Okay, risk means you have no idea what's going on. That's risk. Okay, I would never risk anything. I would invest all day long. I believe in America. I believe in Home Depot. I believe in Lowe's, IBM, AT&T, General Motors, Ford, Wells Fargo. I believe in all of these companies that my brothers, my aunts, my uncles, my cousins, my neighbors, they all work in these companies. Every person you look at while you drive down the road at some point in time probably worked for an American company. If you do not believe in American companies, don't invest. It's actually that simple. Okay? If you do not like Ford, do not invest in it. If you're talking about risk, you're using the wrong stinking thinking. You're not risking, you're investing. It's a huge difference. Augie, your money has to come from somewhere when you retire. You got two choices. Do it yourself or give it to someone else to do for you. That's it. Nobody's going to come to your rescue. This is not a world where we will take care of you. No, you need to do it yourself. Or give that responsibility to someone else. It's that simple. But if you're thinking you're risking rather than investing, it's a huge different story. If you think it's a risk, don't do it. Find something that you think is an investment. Okay, there's a huge difference between risk and investment. But, that's just my thoughts. I could be wrong. My children like to point it out. As a matter of fact, when I am wrong, my children like to write it down on a calendar. IBKR, all the way. I have no idea who they are, but all right, Vic. Emmanuel, thank you. Andrea, how about Visa and Nike and KE? What is KE? I think Visa, C. Okay. Andrea, we can take a look at that tomorrow. Hassan Pfeffer. Hewlett Packard EX date coming up. Cool beans. Angie. So APA, Apache is good stock. Do you cover calls on? Okay, Angie, I said this before. I don't make recommendations and I don't tell people what to buy. I show people the numbers and then you are on your own to do your own due diligence. Okay, I looked at APA and I came up with 3.1. Okay, that would be for me. I'm not telling you to do it. I'm not telling anybody to do anything. Well, I am. I'm telling you, do your own research. Never blindly listen to anybody online. Okay, it's advice. It's entertainment. I sing, I dance. Yeah, all that kind of nice, fun stuff. I don't give advice. I will read the numbers to you, and I will tell you what it says on a calculator, but I will not tell you to buy something. So, Angie, if you like Apache, okay, you make up the decision on your own. I can't tell you what to do. I could, but I'm not going to. Do you think SPY can sustain the 13% payout? No. Hey, Rizzo, thank you for that. ABR, liquid options, high volume, high short interest. Okay. Is that APA Corporation, oil and gas? Okay, that's a good question. Sam Gunn, how are you doing? LightDin 256. What software do you use? Okay, LightDin, this is not software. This is actually a trading platform from Charles Schwab. It's called Think or Swim. Hassan Pfeffer, we looked at Hewlett Packard earlier. Jessen, what system are you using to see the dividends? To see the dividends, I'm using Yahoo Finance. It's just a financial website that shows me the data stream. Now, the data stream is the dates, okay? The opening of the day, the high of the day, the low of the day, the close of the day, the volume, that kind of information. Okay, it's called the data stream. You can get that financial information from almost any financial website. Alice, I love how James calls this a show. It's so cute. Thanks, Alice. Alice, I have no other idea how to do it, you know? But if you think about it, it's the James show. Yay! Anyway, oil and gas. All right, Metallic Angel, Angie, VICI. We already looked at that one earlier today. Equinox, the gym. Never heard of it. Equinix is a network provider for the cloud. Okay. Unplugging from the matrix. Cool idea. I love that idea. Top Dat Baby. Nice to see you, brother. James, can you do some stocks that are on your list for next week? Yes, we can. Tomorrow. Oh, we're almost done. Fighting hunger is running out of money. Okay, I'm not quite sure what that has to do with anything. Zim. Yeah, I'm going to say no to Zim. We looked at that the other day. Logan's Run, LSPD. I have no idea what to say to that one. Can you teach how to sell a covered call or over rolling? Thank you, sir. Okay, Cesar, show up tomorrow. We'll do it tomorrow because we're past 11:30. Neil, thank you. You're welcome. Les, how you doing? S. Hammer, what's happening? Edgar Vasquez, ¿qué pasa, amigo? ¿Cómo está? ¿Está bien, no? MPLX, BWLP, we have to look at it tomorrow. 75 Corvette, how you doing, brother? Love a 75 Corvette. I do. I had a 76. Thoughts on AMD, Advanced Micro Devices? Yeah, check out the dividends, dude. Okay, seriously, check them out. Go into a financial website and look at all the numbers for AMD. Jersey, you're welcome. Malik, how are you doing? Bank of America, low dividends, but maybe in the upside. Thank you there, Christian Dufour. Andrew, I'm late to the game. Do you have anything for PayPal? Yeah, no. PayPal doesn't have dividends. Okay, so I'm looking for cash flow. Now, PayPal is a stock appreciation company. They take all that profits, put it back into the company so the stock price increases. There's nothing wrong with that. It's just that capital appreciation is not what I'm looking for. Okay, if you're looking for capital appreciation, you're in the wrong place. I'm looking for cash flow. Companies that pay a dividend consistently. And then we want to do a covered call against them so we can get a weekly cash flow from it. Still above ground. You're hilarious. Cool beans. QCOM. I like QCOM. Are you holding calls or just doing covered calls on it? You cannot do covered calls on a stock unless you're holding it. So yeah, I do own some calls, and yes, I do covered calls against it. You speak French and Spanish. Cagdala, mon frère. Ah, too. Or how about Domia Shewayan? You don't want to know that one. Cole also owns other companies and has a bunch of free money. Yeah, Kohl's is in a very nice position. A lot of people aren't really paying attention to it. Isn't that plug and play? All right, Corvette, I have no idea what you're talking about at the moment, plug and play. I have 2,000 and only made 10.32 on a covered call with HP the past Monday. All right, hold on a second. Calculator. $10.32. $10.32. And you invested 2,000 divided by 2,000. Comes to a grand total of 0.5%. Okay, I have no, you did it on HPE? Okay, so Angie, okay, $10.32 on a $2,000 investment is 0.5%. Now, 0.5% every week for 52 weeks is 26% per year. Okay, now 26% per year, were you making 26% per year before you came here? I don't know. KODK. I have no idea what that means, Corvette. Mark the Realtor. How you doing? Have you ever used the wheel strategy? Yes, I have. Lindarella, thank you. You're welcome. Steve, just getting here. Steve, I'm just getting ready to leave. Okay. William McKinney, how's it going? From Kansas. Woohoo! Okay, Sanhara, how are you doing? Okay, so all that being said, that's all the questions from YouTube. Oh, wait a second. It was 15 and I got 10:32. Oh, Kodak. All right, we'll take a look at it tomorrow. Okay, Corvette show up tomorrow between 9 and 11:30 Eastern Standard Time. Okay, it's 11:44. I'm out of here. You guys have a great night, and we will see you again tomorrow. Now, tomorrow is Thursday, so that's the last day for me for the week, because I don't do Friday nights anymore, and I don't do Saturday nights anymore. Last year, it was 7 days a week. Last year, I missed 6 days. So 359 days straight. 6 days I missed. Okay, I was sick as a dog one. Took someone to the emergency room in the other one. The other 4 was because of the hurricane. Okay, remember the hurricane that came through St. Petersburg? Yeah, no water, no electricity, no cable, no internet for 4 or 5 days. That's okay. I'm a Gen X. I was like camping. I had fun. It was enjoyable. Anyway, you guys have a great night. Bye over here on Facebook. Catch you guys later. Instagram. Catch you guys later. And now the end is near, and so I face the final curtain. My friends, I'll say it clear.